two altcoins, Hype and Aster, one still far below its all-time high, but both with active development teams and a growing community. And if you have both of them on your radar at the same time, one question immediately comes to mind. Which one has the better setup and why is the difference between them? Is it actually bigger than it seems at first glance? That's exactly what we're going to take a closer look at today. And by the end of the video, you'll know which metrics really make the difference here. And which of the two coins has the structurally stronger foundation in the current market phase? And the answer is actually not the one most people expect. Hi, I'm Marius from 10x Analytics, and today we're going to take a look at Hype and Aster. So, as always, grab yourself a nice relaxing coffee and leave a like for me. And then we'll get started. But before we begin, one more piece of information for you. If you want to get started with data-driven analyses for free, then check out the 10x Insider. For example, I post altcoins and stocks that I find in my analyses, as well as news updates. All for free, everything is down in the video description. Let's start with some context first. Hype stands for Hyperliquid and is a decentralized preparatory trading protocol that has attracted massive trading volume in recent months. Aster is a newer layer 2 ecosystem focused on modular infrastructure. Both, but on paper they have similar characteristics. The question now, of course, is which setup is stronger based on data? Stronger? What exactly are Hype and Aster? Let's start with the fundamentals first. Hyperliquid, or Hype, is a layer 1 protocol specifically built for decentralized derivatives trading. It operates a fully on-chain order book. This means that every order, every transaction, and every liquidation ultimately runs transparently on its own chain. This is technically more complex than the classic AMM models, but it allows for a trading experience that feels closer to centralized exchanges. The protocol had trading volumes in several phases that were comparable to smaller CEXs. That's not a marketing statement, but actually true. In contrast, Aster positions itself in the area of modular infrastructure. The project is based on the idea that future blockchain systems will not be monolithic, but modular in structure. Individual layers such as execution, settlement, or data availability are separated from each other. Aster is trying to establish itself as a connection layer between these ecosystems. The project is younger, the tokenomics have not yet fully arrived on the market, and the team is currently actively building. Integration. Two different levels of maturity. But what does this actually mean for the setup? Let's take a look at that now. And in doing so, a key figure will come up that many investors completely ignore: why context is crucial. Before we dive into all the metrics, let's take a step back first. Why is the comparison even meaningful in the first place? Both projects are so-called mid-cap altcoins. They are neither microcaps with extreme risk nor blue chips like Ethereum or Solana, for example. They exist in a space where liquidity, narrative, and timing interact particularly strongly. In this segment, the ratio of usage to valuation is especially revealing. With one project, there is real usage and a low valuation, so the risk-reward ratio is structurally different compared to the other project, which is mainly based on future promises. This is not a judgment, this is an analytical framework. And it is precisely this framework that shows a clear difference between hype and substance. Hyperliquid is already generating massive measurable protocol revenues, so the protocol has real users, real volume, and real fees. That does not automatically mean that the token will rise, but it does mean that the valuation can be measured against something real. It's different with Aster. Here, the thesis is based on future adoption. Modular infrastructure is a relative narrative, but the user numbers and protocol revenues here are not yet at a level that provides an independent valuation basis. This noticeably increases the risk profile. Now you know why context is important. But what does this actually look like in the key figures? And which metric is the one that really makes the difference? We'll take a look at that in a moment, but first, a brief and important aside. Many investors I know always have the same problem. They find interesting projects, read white papers, look at charts, follow Twitter, or rather X. But in the end, what's missing is a structured assessment that helps decide whether the setup is currently strong enough for a position. I was in this situation myself, lots of information, but no clear framework. At some point, I started building a watch list for myself. with clear criteria for when a setup is interesting based on data and when it isn't. And that's exactly how the 10x Elite came about. A structured approach that helps you evaluate projects like Hype or Aster not based on gut feeling, but according to comprehensible criteria. So no hype lists and no recommendations either, but rather a toolbox for data-driven analyses. You'll find the link for this below in the video description. What do the metrics look like? Now let's get to the concrete analysis and above all the duel. So which key figures are actually relevant for the comparison? First, TVL, meaning total value locked. Hyperliquid has a TVL that consistently remains in the 9-figure range. This shows that real capital is locked within the protocol. Aster is clearly much earlier in its cycle here. The TVL exists, but it's not yet at a level that allows for a reliable valuation. Second, protocol revenue and fee structures. Hype has a clear fee model. A portion of the trading fees flows back into the protocol and is used for token buybacks. Of course, this is a deflationary mechanism that directly affects the supply side, is influenced. Aster does not yet have a comparable active fee-sharing model. 3. The token distribution and the lockup periods. This is the metric that many people really ignore. For newer products, that is, projects vesting, meaning the lockup period is included and is crucial. If a significant portion of insider tokens is unlocked in the next 6 to 12 months, it will naturally increase selling pressure, structurally. For Aster, this vesting schedule should be examined closely. With Hype, the majority of the distribution has already taken place, but there is still a risk. Nevertheless, this means less future supply pressure from the team allocation area. 4. Developer activity on GitHub. Both projects show active comments and regular updates. That is positive for both sides. However, Hyperliquid has a longer track record when it comes to actual protocol upgrades that have gone live. But what do these 4 metrics tell us when considered together? And what does that mean for the final setup verdict? That's coming up now, and we'll also look at a factor that could shift the picture once again. What are the risks and mistakes in the analysis? Now comes the part that most people simply skip. What mistakes are typically made in such a comparison? The first mistake, using market capitalization as the only metric for comparison. Many people compare 2 altcoins solely based on which one is cheaper, but that's a trap. A low price does not automatically mean a better setup. What really matters is the ratio of valuation to actual usage. The second mistake, treating narrative as substance. Modular infrastructure is a strong narrative. But narratives without user data are not an investment thesis. They are nothing but pure hope. Hopes can come true, but you can't evaluate them based on data. The third mistake, not making the risk profile explicit. Aster is still an early stage project. That means an asymmetric risk-reward profile in both directions. For example, more upside potential with adoption, but also more downside risk if usage fails to materialize. That's not a bad thing if you're aware of it. It becomes a bad thing if you ignore it. The fourth mistake, underestimating the correlation with Bitcoin and the overall market. Both coins move within the overall altcoin cycle. No matter how strong the individual setup is, if Bitcoin weakens, both will also come under short-term pressure. The setup determines who recovers quickly, not whether short-term pressure is avoided. Those are the mistakes. Now we come to the question that has been open from the very beginning. Which of the 2 setups is based on data stronger? And what are the concerns though? That shouldn't be ignored even in a strong setup. Let's move on to the assessment now. The question at the beginning was, which of the 2 altcoins currently has the better setup? Based on data, Hyperliquid, so Hype, has the structurally stronger setup. That's also currently reflected in the price, after all. Real protocol usage, verifiable revenue, an activated deflationary mechanism, and a largely completed initial vesting profile. These are all measurable factors. This isn't hype, this is verifiable substance. Aster is interesting as an early infrastructure project within a relevant narrative. But the usage data is not yet at a level that provides an independent basis for valuation. That increases the risk and of course also changes the category. A data-driven thesis turns into a speculative bet on future adoption. Both can play a role in a portfolio, but they are completely different risk profiles that should be treated differently. The most important consideration with Hype is that it still shouldn't be ignored. Hyperliquid is technically complex and more centralized than it appears at first glance. The validator structure and the team's governance control are factors that definitely put the decentralization promise somewhat into perspective. Anyone who doesn't assess this does not have a complete picture of the risk. The CRV Hype is currently more attractive than with Aster if you don't focus exclusively on existing usage. And look at the protocol's substance. For those who are betting on early potential with higher risk, Aster is the option worth discussing. But as always, this is not a buy or sell recommendation, nor is it financial advice. This weekend, I found an altcoin that is, by the way, extremely exciting. Don't miss it under any circumstances. Feel free to subscribe to the channel now so you don't miss anything next weekend. But let's really take a look at Aster and Hyper together now, shall we? On the chart, what does the current situation look like and when would I personally consider entering? Let's jump straight into the chart analysis. Let's start with Hyper. We saw that Hyper just had a huge surge. Because ultimately the gains from Hyper are currently extremely strong in the crypto sector. Other altcoins I would say don't have that. And that's why of course they were valued higher now as well. So we had an increase here of almost 100%, which is quite significant. Then my indicator already signaled a big red dot. That always means we're in the overbought zone. In other words, a danger zone. I immediately know, okay, now I need to be careful. This could potentially be a top forming. And in the end, that was a local top here as well. We were then sold off. After the indicator showed that, we dropped by almost 30%. Then, by the way, my indicator showed a small green dot. So that means it signals, okay, now there could be a bullish trend reversal. And that was actually the case. When the dot appeared, we rose another 35%. But here there is a strong resistance line, and now we've been sold off a bit again. Exactly where we are right now, that's still important. Up here and down here is always the range where it's more bearish, because we're entering overbought zones. Down here is more the zone where it becomes bullish, because we're entering oversold zones. The 10x indicator basically visualizes the data, and that's simply an advantage because you can quickly get an overview. You can also use the indicator yourself. Link in the video description. In any case, we're now slowly entering the overbought zone here. Which of course means that we're now moving back into the danger zone here. So my personal assessment at the moment, I would wait until we come down here and until a bottom forms here. So in other words, as soon as a big green dot appears, that's an interesting point for me. That's where I might consider entering with Hyper, but at the moment that would be too risky for me because, as I said, there's still a bit of room to the upside, but from my perspective, it will then go down significantly again. So I would wait for the big dot here. Now let's take a look at Aster. It looks a bit different here compared to when they were launched. This is on Coinbase. They were sold off massively if you take a look at it. Of course, the hype was extreme back then. But by now they've also dropped by about 70%. And here it was relatively stable. That's rather untypical for a cryptocurrency because here they basically moved sideways almost the entire time and always stayed in the middle range. Here, as you can see, it's neither bearish nor bullish. But at the moment we formed a small red dot. That always means there's now a chance for a bearish trend reversal. They've already been sold off as well. So with Aster, I would be very cautious here. It could definitely go down much further. And as I said, the question is whether the narrative will hold up in the next bull run. It's from CZ, the founder of Binance, so the narrative could definitely come back. But from a technical chart perspective, I would also wait here until a large green dot forms down here. And then it will definitely be an exciting entry point. Before you go, here I'm linking both analyses for you with price scenarios up to 2030. Thanks for watching and see you in a bit.